Tonight, we examine a decision that's shaken not just Washington, but the entire world stage. A moment that has sent shockwaves through global markets and challenged the very foundations of presidential power. At the heart of the controversy, the Supreme Court's forceful rebuke of President Trump's sweeping tariffs, a move that has ignited fierce debate among lawmakers, business leaders, and everyday Americans alike. Tariffs, essentially taxes on imported goods, have long been used by governments to protect domestic industries, raise revenue, and sometimes to send a political message, but their impact ripples far beyond the docks and warehouses, affecting prices, jobs, and even international alliances. President Trump wielded tariffs as a central tool in his America First agenda, targeting a vast range of products from steel to electronics, and invoking national emergencies to justify his actions. His approach was bold, controversial, and unprecedented in its scope. The legal foundation for these actions, the 1977 International Emergency Economic Powers Act, or IEEP, a law originally crafted to give presidents authority during true national security crises, not as a tool for waging global trade wars or economic brinkmanship. No previous president had ever used IEEPA to impose such broad, far-reaching tariffs. This set the stage for a historic confrontation between the executive branch and Congress, which the Constitution grants explicit authority over trade policy. Other countries quickly retaliated, slapping tariffs on American goods and escalating a global trade war that touched nearly every corner of the economy, from agriculture to manufacturing and even the tech sector. Businesses across the nation faced chaos in their supply chains, struggling to adapt to sudden changes in costs and regulations. For American consumers, the effects were felt at the checkout line, as prices on everyday goods began to climb. The very policy meant to protect the U.S. economy became for many a heavy burden, leading to layoffs, shuttered factories, and unsold crops piling up in rural communities. The fallout was swift and severe, prompting a legal challenge that would ultimately reach the nation's highest court, where the limits of presidential power would be put to the test. Tonight, we trace the dramatic story of how a president's economic weapon became a constitutional crisis, raising urgent questions about checks and balances and the future of American democracy. And we ask, what does this mean for the future of American trade policy and for the power of presidents yet to come? Today, the Supreme Court delivered a stunning 6-3 decision. President Trump had overstepped his authority. The justices ruled that the IEEPA did not grant the president the power to impose such sweeping tariffs. The law never mentions tariffs, duties, or imposts. Congress's domain, not the president's. Even Trump's own appointees joined the majority, emphasizing that only Congress can rewrite trade policy on this scale. The court drew a clear line. Presidents cannot use vague emergency laws to transform the economy without explicit congressional approval. This decision is a major check on executive power, regardless of who sits in the Oval Office. If a president wants a global trade war, they must get Congress on board. The balance of power at the heart of American democracy has been reaffirmed. The Supreme Court's decision sent shockwaves through global markets, catching investors and analysts off guard. The ruling was more than just a legal milestone. It was a catalyst for immediate and dramatic change, as financial institutions scrambled to assess the implications. Stock markets surged in a frenzy of activity, with green arrows lighting up trading screens. Commodities fluctuated wildly as traders tried to predict the next moves, and the world braced for a new era of trade, uncertain but full of possibility. For years, Trump's tariffs had distorted global supply chains, forcing companies to reroute shipments and rethink sourcing. Production lines slowed or halted, and border checkpoints became choke points for international commerce, creating a climate of uncertainty for businesses large and small. Now, with the tariffs ruled unlawful, the U.S. government faces a massive refund, an estimated $87 billion owed to American companies. This unprecedented payout is one of the largest in recent history, and it's sending ripples through the Treasury Department. The Treasury must process thousands of claims, each representing a business that had absorbed the costs of tariffs for years. As checks are issued, cash is injected back into companies, offering a much-needed boost to those who weathered the storm. For many, it's a lifeline, a chance to recover, reinvest, and rehire workers who were let go. Small businesses in particular see this as an opportunity to rebuild and regain lost ground, while larger firms can finally move forward with delayed projects. But for the government, it's a sudden and significant budget hit. forcing lawmakers to confront a major revenue shortfall. The unexpected refund has upended fiscal plans, and officials are scrambling to find ways to fill the gap. The scale of the refund underscores just how deeply the tariffs had reshaped the economy, affecting everything from manufacturing to retail. Economists are now re-evaluating forecasts, and business leaders are rethinking strategies in light of the new landscape. The court's decision didn't just end a controversial policy, it triggered a financial reckoning, forcing a nation to confront the true cost of years of trade conflict and legal uncertainty. The effects will ripple from Wall Street's trading floors to Main Street's small businesses, touching every corner of the American economy for years to come. Both urban and rural communities will feel the impact as the nation adapts to a new reality. America's economic relationship with the world has been fundamentally reset, opening the door to new partnerships, new challenges, and a future that is still being written. Behind the numbers are real businesses and families, people whose daily lives are shaped by economic forces far beyond their control. Every policy decision, every shift in the global market ripples through their homes and workplaces, affecting how they live, work, and dream for the future. General Motors, a symbol of American industry, relies on a vast network of global supply chains to keep its assembly lines moving. When tariffs hit, production costs soared, and the threat of layoffs loomed large. Workers worried about their jobs, and communities built around these factories faced an uncertain future. Mattel, the iconic maker of Barbie and Hot Wheels, suddenly faced skyrocketing import costs from China. The company was forced into tough decisions: should they raise prices and risk losing customers, or absorb the costs and see profits shrink? For many companies, neither option was easy. For families across America, this translated into higher prices on everything from toys to washing machines. Everyday essentials and special treats alike became more expensive, stretching household budgets and forcing difficult choices at the checkout counter. Small businesses, lacking the deep pockets and resources of corporate giants, were hit hardest of all. Some were forced to close their doors for good, while others barely managed to survive, scraping by month to month and hoping for relief. A North Carolina furniture maker or a local electronics shop saw their already thin margins erased almost overnight. Years of hard work and community investment were suddenly at risk, threatening not just businesses, but the livelihoods of entire families. Economic studies made it clear, American consumers, not foreign countries, bore most of the tariff costs. At the grocery store, the mall, or the hardware shop, it was families who paid more, often without realizing why prices had jumped. The tariffs became a hidden tax on everyday life, quietly draining wallets and adding stress to already tight budgets. For many, it meant putting off purchases, cutting back on family outings, or worrying about making ends meet. The Supreme Court's decision is a relief for businesses and families alike. It offers hope that the worst is behind them, and that stability may finally return to their lives and livelihoods. Now, there's a chance to rebuild, recover, and move forward. Communities can begin to heal, and businesses can start planning for a brighter future. The story of tariffs is ultimately a story about people, those who paid the price, and those who now hope for relief. It's about resilience, adaptation, and the enduring spirit of American families and entrepreneurs. The economic weight has finally been lifted, at least for now, giving everyone a chance to breathe a little easier. But the debate over how to protect American jobs and the best path forward for the nation's economy is far from over. Central to today's ruling is the Major Questions Doctrine. It says that for issues of vast economic and political significance, agencies need clear, specific authorization from Congress. The court has used this doctrine to strike down sweeping policies, from environmental rules to student debt relief. Critics warn it gives the judiciary too much power to block executive action. Supporters say it keeps major decisions in the hands of elected lawmakers. In the Trump tariffs case, the court found no clear congressional approval for such a global trade regime. The Major Questions Doctrine is now a formidable check on presidential power, and it's here to stay. President Trump didn't wait for the court's decision. He went on the offensive. He warned of economic disaster if the tariffs were struck down, rallying his base and pressuring the justices. Days before the ruling, he accused Canada of meddling and hiked tariffs on Canadian goods, abruptly ending trade talks. He declared new emergencies to justify tariffs on Brazil, citing political disputes. These moves strained alliances and created global uncertainty. Even the Solicitor General echoed Trump's rhetoric in court, framing the tariffs as essential to national security. the administration's legal and political campaign blurred the line between policy and politics. Trump's strategy shaped the narrative, delegitimized the court, and energized supporters. The world watched as the president tried to bend the outcome to his will, but the Supreme Court's decision proved immune to pressure. The rule of law prevailed over political theater. The tariff fight wasn't just in the courts, it raged in Congress too. Lawmakers from both parties argued that only Congress can regulate trade and taxes. A bipartisan group of senators filed a forceful brief against Trump's use of emergency powers. The Senate passed resolutions to overturn the tariffs, but the House, led by Trump allies, blocked them. This split revealed a deep rift over executive power. With Congress deadlocked, the Supreme Court became the final check. The battle over who controls trade policy is far from settled. The Supreme Court's decision ends one era and begins another. Tariff removal acts as a tax cut. Businesses and consumers should see relief. The ruling resets America's global relationships, opening the door for new negotiations and alliances. But the core issues, trade, imbalances, lost manufacturing jobs, remain. Congress, now firmly in charge, must decide the future of U.S. trade policy. Will America embrace openness or protectionism? The answer will shape the nation's economic destiny. For now, the power to chart that course returns to the people's representatives.